well, Salesforce reported on Thursday,
Oh, yeah.
so I think that would be a good one to go over. I've done quite a sort of decent sized deep dive into these earnings to try and get out as much detail as we can for people. Just on the whole, this is pointless stuff that I think Salesforce are doing. It is my general take on it. It's like the market said, show me margins. You keep saying you've got margins, show me margins, and Salesforce has just gone, all right, here you go. But it doesn't matter whether it's a show me margins or the margins are actually there. This business has always been performing well. Nothing has changed in that regard. But I'll give you the numbers, Steve, see what you think. So Wall Street wanted $1.36 in EPS, and Salesforce gave you $1.68, so beat it quite handily. That actually was a non-GAAP operating margin of 29%. That's when they sub off the stock-based comp. That was actually up 14 percentage points. Revenue, Wall Street wanted $8 billion and CRM delivered $8.38 billion, so nearly $8.4 billion. So quite a handy beat over what Wall Street wanted. So I've got how this is broken down for you. So Salesforce basically has 5 main areas. So the sales division grew revenue from 1.6 billion to 1.8 billion. That's 13% year on year. Service grew from 1.7 billion to 1.9 billion. That's also 13% year on year. Platform and other, this is things like Slack and their little shop thing. That went from 1.4 billion to 1.6 billion. That's 15% year on year. Marketing and commerce went from 1 billion to 1.2 billion. That's 13% year on year. And data was the last one, went from 1.1 to 1.3 billion. That's 18% year on year. So none of those in constant currency. I'll just give you them quickly in constant currency if you want them. So sales was up 16% constant currency, service 15%, platform and other 18%, marketing and commerce 16%, and data 20%. So very, very strong across the board in all segments. Guidance was good as well, Steve. Wall Street wanted $1.32 and Salesforce said have $1.60. Wall Street wanted 8.05 billion in revenue. Salesforce said have 8.16, so an extra 100 million on top. Full year guidance, Wall Street wanted $5.84. Salesforce said have $7.12. And they wanted 34.03 billion in revenue, and Salesforce said you can have 34.5, so an extra 500 million at the low point of their guidance as well. They actually guided up to 34.7, which is about 10% implied growth. And the RPO, remaining performance obligations, actually grew 12% to 24.6 billion. That's 13% if we're going FX neutral. A couple of other things, Steve, that I saw. There's a 20 billion buyback to negate stock-based compensation. Stock-based compensation is now falling from 10% of revenue to 9% of revenue, so that's very, very positive. The share count actually declined this quarter, Steve. It's the first time that's ever happened. It declined 1.3%, and there's a new buyback, so there's going to be a bit more of that to come, I would think. I noticed Elliott Management put out a statement. They're going to take credit for this, Steve. Here's what they had to say. Elliott has been in close, substantive dialogue with Salesforce leading up to today's earnings statement. Salesforce's set of announcements today represent progress towards regaining investor trust. The acceleration of margin targets, commitment to responsible capital return priorities, creation of a business transformation committee, and the disbanding of the merger and acquisition committee are the necessary steps forward. These steps are consistent with our recommendations, and we believe they will help restore value at Salesforce. Benioff, he was very bright. He's always very bright on the conference call, but here's a few things that he came out with, Steve. So, as you can see from our results, we had another strong quarter. Improving profitability is our highest priority, and that really showed up this quarter. Our goal is to make Salesforce the largest and most profitable software company in the world, so watch out, Rightmove. He said, now we immediately put into place an accelerated transformation plan with 4 areas: short-term and long-term restructuring of the company, improving profitability and productivity, prioritising our core innovations, and a deeper and even stronger relationship with our shareholders. Just a few little bits on that. So he said, first, we're reigniting our performance culture and doubling down on our accountable management of our sales organisation, as you're about to hear from Brian. As you know, beginning in January, we also initiated a headcount reduction and we're significantly consolidating our real estate footprint. Second, we're closely scrutinising every dollar of investment and resource and are very focused on driving operational excellence and automation across the full business. Third, our amazing engineering team is focused on integrating our acquisitions and prioritising our core innovations that are driving customer success. And finally, as we set in motion longer-term structural improvements, we're working with Bain on a comprehensive operating and go-to-market review. To ensure a high degree of accountability, our board is forming a new business transformation committee, which I have joined myself, and we have fully disbanded our M&A committee as well to reflect our new focus. I thought this was a pretty good report, Steve. Beat on every regard, very, very chipper. Stock was up about 12% the next day as well, which took me from red to green. Anything in there that you didn't like the look of?
No, nothing that I didn't like the look of particularly. I'm a little bit, I suppose, suspicious of a couple of things that are connected to each other here. Exactly what we need the creation of a business transformation committee for, I'm not quite sure. I get that maybe you want to do away with the M&A stuff because the M&A stuff is risky at the moment, we might say. I also quite like the fact that it feels like the way with these things, and I'm still quite new to all of this, that with activist investors like Elliott Management, they sort of shout at companies a bit, and then companies often do the things that they tell them to do. Think Nelson Peltz at Disney. And then what you have afterwards is a good amount of the company saying, well, yeah, that's what we were going to do, isn't it? Before you started shouting. We were going to do that anyway. And the activist investors going, another job done. Well done us. Away we go.
Well, it's worse than that, isn't it? I think it's worse than that because these results are like, you can stick an implied margin in if you want to see if you want to see profits. If they actually turn that into profit or don't turn it into profit, it's irrelevant at the moment, isn't it? I mean, if you're saying to me Salesforce now has to become a mature business and they have to, show you free cash flow and show you operating cash flow and show you profits on the bottom line, then it's kind of like a big, whoa, who cares? It doesn't matter. It was already there. So to sort of like walk off and say, job done, boys, Elliott Management is the winner. It was just, it's a massive circle jerk.
Yeah, so we had operating margins of, I think you said 29%, which is
non-GAAP.
Yep. So that was losing stock-based comp from the thing, right? I mean, that's okay, but I mean, leaving that thought aside for a moment, that does get you to the kind of operational area that we associate with software companies. I think operating margins tend to be sort of around that area or slightly higher, so I mean, that shows you that Salesforce kind of can do it when it puts its mind to it. I'd be interested to see how that develops going forward. If that margin gets much bigger, it starts to get kind of past what I might have been kind of vaguely modelling for this as a business, and that's interesting and good to see.
It gets interesting, I think, if they can meet that revenue guide that they gave us last year. So if they get into 50 billion in revenue with 29% even non-GAAP op margins, share count coming down, Steve, this looks pretty undervalued to me. I think they're actually guiding for only 27.7% margins, I think it was off the top of my head, for the next quarter. So whether there is some oddity in the billings there or not, I forgot to look. There may be some different types of billings in that area, or lower margin billings maybe, but it's still 5 percentage points higher than Wall Street was expecting. So and I think there's more to come in terms of profitability, because a lot of these people that they've let go, they'll still be paying some kind of restructuring fee and right sizing the real estate. That's not cheap. So there's definitely more profitability to come from Salesforce. A bit sad to disbanding the M&A committee. I understand that that's not flavour of the month at the moment, but that just means prices are really good, and there's a lot of companies in that money incinerator pie that I think would be great bolt-ons to Salesforce. I think I did see a couple of people on Twitter saying this is, most companies come with this kind of idea of building like a new calendar or something, getting to 1,000 or 10,000 users and selling themselves to Salesforce. So if the M&A committee is disbanded, then that idea is in dire straits.
So there's at least some unfortunate entrepreneurs trying to come up with something different here then.
Yeah, they're going to need to sell it to somebody else, aren't they?
Yeah, Berkshire Hathaway will have them. They're in the business for buying calendar apps.
Yeah, maybe Monday.com.
So steady growth across the board then from all those various segments that you mentioned. It's all sort of in what we might loosely call the 15 to 20% range. That's, I guess, kind of encouraging to see, right? I mean, you like seeing things all moving forward together. One of the reasons that Google kind of came under pressure is because it is, to a large extent, Google. And anything that were to disrupt that, very, very difficult though that would be kind of devastating for Alphabet. But I'm not sure how the revenue breaks down here with Salesforce, but lots of different segments kind of moving forward in reasonable fashion together.
Yeah, I don't think Salesforce is the same as Google. I think Google's a lot more cyclical than we probably gave it credit for last year or whatever. I think Salesforce is a little bit different. Salesforce, I always think, is a little bit like Ivy. It kind of gets its sort of like roots in every part of whatever it's growing up. And that makes it very, very difficult to rip out. And I mean, I have ripped out a Salesforce product before, and I can tell you it was bloody difficult, and we hardly used it for half of the features it had. So imagine these people who are using all 5 products and then decide to switch to somebody else. I don't know if I'd fancy that. I don't know if I'd fancy that at all. But I think that's its moat, isn't it? Its moat is that it is incredibly difficult to remove, and it's pretty unique in the sort of like whole service offering that it has. So I think it's an exciting one moving forward. Steve, is it something that you think you could buy?
Gosh, I've thought about it. I've thought about it a few times. I do kind of use some of its products, but I sort of used them, and I was thinking about this earlier, because they're kind of foisted on me, not because I'm a great believer in them particularly. I don't choose to use Slack. The organisation I work with uses Slack, and therefore I use Slack. I also use Discord. Do I have a sense of which one I'd prefer to use? Not really. Some of the ones that some of the organisations I'm with use Telegram for kind of internal communications, because they think you can do some sort of kind of nesting groups in it or something. I don't have a clue. So this is a product that I kind of use, and it's fine. I also get that once you're into this, you would be unlikely to get out of it again, because moving everything across to a different system looks like a lot of work, especially for kind of training people to use different things as well. So I see the force of it, and I own a Salesforce-like business, which is Guidewire, and I live in fear that they will come after Guidewire some of the time. It's the reason I don't own one of the other ones, but I sort of think maybe. I want to say if it hadn't had that big run-up, that's probably a lie, to be honest. It jumped about 15% after these earnings, right?
It did, yeah. It's down a little bit today, though. It was last time I looked. It dropped back about 2% or something like that.
Fair enough. It may well still be good value here. I could definitely see my way towards thinking that. Could I see my way towards buying it? It gets a lot easier when it starts turning into... I know you said you can kind of pencil in the margins if you like, but getting some, seeing them and having confirmation of what they are does make it that bit easier, and that's, I guess, why the stock is going up.
Still 40% off its highs, Steve. It's still a long way from where it was.
What's that? Nearly a double then from here, if you can get it back to its highs. But maybe. You own it, right?
I do, yeah. My average price is, I'm just looking, it is up 0.24 today. So my average price is about $190. So you'd be getting it cheaper than I was today. Unfortunately, I've got 6 or 7% positive, or fortunately, 6 or 7% positive FX. So it sweetens the deal a little bit for me.
Cool.